What's going on, you guys? It's Royce Jacob. Welcome back to the channel, and in this video I'm going to give you guys my take on the current equity markets or stock market, considering we saw a pretty bloody day today, as I'm sure a lot of you guys are already familiar. I'm not surprised by this at all personally. If you guys happen to catch the video I posted yesterday, you would know that I was actually planning on making a video today, which is this video, talking about why I think we'll see another pullback in the stock market. By no means is this an original idea. I've seen so many videos floating around YouTube talking about why people think the market's going to crash again. It's not a crazy thought by any means. Anyone who kind of understands the markets and has been in this game for a decent amount of time would know that it's very obvious that we would have to see a pullback after this dead cat bounce. I'm sure a lot of people, it's crazy how many people are familiar with that term now after this, but that is what it is. That is what it is in my mind, is a dead cat bounce. It is where you see a sharp drop, a super sudden drop in price, followed by some optimism, and that's exactly what this is. That's optimism and hype that has driven this rally that we've seen here. And that did come to a significant end today, kind of. Not necessarily an end, but we saw one of the most significant corrections we have since this dead cat bounce, or this relief rally that began back in late March after the initial crash. All right, so we're going to look over three charts here. They're all the Dow Jones. This is all DJI. I think the Dow Jones is a pretty good way to sum up the entire equity market as a whole. So we're going to be looking at the Dow Jones chart, DJI, across three different time frames. Okay, so this is the present. Again, this is the crash we just saw back in March, followed by a chart of the Great Depression. Okay, so this is 1929, 1930, when we saw a very similar correction happen back in the 1930s when the Great Depression was in play. Okay, and then after that, we're going to be looking at a chart of the 2008 financial crisis. Again, another catastrophic event in regard to the markets. So we'll take a look at all three. You guys know the old cliche, history does not repeat itself, but it can rhyme. It's always good to look back, no matter what chart you're looking at. Anytime you're looking into a company or into an investment, it's always good to look at the historical data of a chart, just to have it guide you in the right direction. Again, it rhymes, but it doesn't repeat itself. Okay, so it's always good to look at them and just kind of expand your horizons, because again, history can be very telling of what will come today. All right, so we're going to take a look at those three, and I also want to show you guys this article from CNBC that I thought was pretty well written up. It breaks down. It's kind of interesting how it does this. I actually haven't read an article like this, definitely on the channel before. It goes across. It's a bunch of different time frames that span across market hours today. And for anyone who's watching later on, today is June 11th. Okay, so Thursday, June 11th. For anyone watching in the future. But again, it goes over the timelines in different points in time today, and talks about different factors that played into the market falling so significantly today. All right, so I'm not going to read all of those. For sure, you guys can check it out if you want to. The article is Stock Market Live Updates, Dow down 5%, reopening trades drop, back to bear market. Back to the bear market. Are we back in a bear market? I actually think so. I think that's a pretty appropriate title. I'll probably title this video something similar. Probably not that cheesy, but something along the lines. I do think we have a significant more way down to go, and I do want to rationalize why I think that. And again, there's so much content out there about this. I'm just giving you guys my opinion. Always remember that, you guys, this is only my opinion. Everything I say here could straight up not play out, but this is what I'm thinking from the data I have available to me and the experience I have. All right, so before we dive into the charts, as always, if you guys do go on to gain value from this video, I'd really appreciate it if you gave it a like and subscribed if you're not already. And if you are, thank you very much. Also, you can check out the newsletter, my daily newsletter, down below. First link down there if you are interested. If not, no worries at all. All right, so let's get straight into this chart. As you can see here, again, okay, this is on the weekly chart. All three of these are on the weekly charts. All right, so it definitely sums up. Daily chart would be a little more specific, but we are looking at the weekly here, okay? So weekly chart right here, this is a huge red candle, and again, this is the most, I think, since this correction, as of right now at least. The weekly is already obviously not over. Tomorrow it is, so that will be a very significant close tomorrow if we do go down a little more. Tomorrow, I personally think it's foolish to make such short-term predictions in this market. It's such an irrational and crazy market. But I wouldn't be surprised if tomorrow, actually, I wouldn't be surprised if it goes either way. If we see a bounce, because today was so red and so bloody, that we see somewhat of a correction tomorrow and a bounce up tomorrow. But I wouldn't, considering it's Friday as well, I also wouldn't be surprised at all to see it continue to fall down and just, yeah, again, continue to go lower because people don't want to hold their positions over the weekend. All right. So from a macro time frame, you can see here we have been on an absolute rip for the past few years. Like, look at that. Just keeps going up, kept going up. The Dow could never fall. And it's just crazy how a lot of people, I feel like a lot of new traders, which we will talk about the retail investors who are driving this market right now, don't look at the historical charts like this. They look at the yearly 5 years max. So it doesn't look too crazy considering 5 years. I mean, again, 5 years, we're up a lot in 5 years. So that's crazy. But when you go back like this, it really takes things into perspective. All right. So talking about perspective, talking about that dead cat bounce I was mentioning in the beginning, got to slow down a little bit. This is the 1929-1930 Great Depression. I'm sure all of you are familiar with the Great Depression, classic, historical. Not necessarily what it did to the market, but what it did to the overall economy, the global economy at the world, to the world at that time. So we see here, we see a very significant, again, this is the weekly, we see a very similar, just sudden drop. All right. So I'm not sure exactly what, I have to imagine it was the announcement of war that was the catalyst for this, but we saw a very significant drop at this time. Okay. So it spanned a couple weeks. If we look at today, we only dropped for a couple weeks. Again, it was up and down. Nothing ever goes straight up. Nothing goes straight down. That's the game. That's how things play. But this actually went straight down, and it makes sense to me why this lasted a little longer. I will say I do think that everything's sped up right now. I have mentioned this in previous videos, but I think the reason that this is a lot more elongated, if we zoom out, it actually took from July 1932, from the initial crash that was November of 29. So it took like 2.5, 3 years for this market to actually find a bottom. Today, I don't think it will happen a lot. Literally everything happens faster. All right. Technology's better. There's more access to information. Everything, like all the trading we do, Robinhood Traders, it's literally at your fingertips. Okay. So things just happen faster. I do think we'll see another significant move down over the long term, but I don't think it will span a few years. Hopefully, at least I will stay optimistic in that regard, but I do definitely think that things will move faster. Okay. So again, this correction, this fall down was probably similar. Yeah. I mean, this was a crazy correction over here. All right. But again, you see a very significant move down. This happened faster than it did back then. I think, again, you see this dead cat bounce happen over the span of what is that? Okay. So November 29 to April. So about 5 months, this dead cat bounce was in play. All right. And this has only been, what's it been, 3 months? Time is going so fast right now, or so slow. Yeah. Time is going so fast right now. It's crazy. It feels like so much longer ago that the market bottomed. But it has felt like forever, to be honest, that we've been on this dead cat bounce or this relief rally that we've seen over the past couple months. All right. And I just want to show you guys that, and we've seen the first taste of it today. Okay. So that's a crazy day. Today we saw a crazy correction. I do think that this is the beginning of what will be another significant move down. And again, I don't think it's going to happen as slowly as it did back in 1930, but I do think it could potentially be as significant. All right. That's a crazy looking chart. And again, times are very different. Access to trading is very different. Again, we have it all. Everything's digital. Everything's at our fingertips. It's far more accessible. So that does change the game. But charts show psychology. All right, you guys. This is a game of psychology, not necessarily a game of financials, but this is a game of psychology, which is a very important thing to keep in mind. And that's the big reason we look at charts. All right, charts don't. Again, the stock market and the economy are very different, as we've seen over this past month, but you are playing with the psychology, and that's a lot of what charts show you and historical data can show you. All right, so let's take a look at the financial crisis in 2008. So this one's a little more all over the place. This one was definitely a more steady move down, aside from right here back in September of 08, where it just absolutely tanked. But you see the same thing here, kind of. A significant move down for a few weeks. You see it go up a little bit. That one's not significant, or that one's not very significant or very exaggerated by any means, but you will see it every once in a while. Okay, so this significant drop, you get a move up, get a move down, up, down. Again, everything's very up and down. And that's the thing, you guys. Well, we can see here, this is important, okay? So you see S&P, Dow, both down like 6-7%. But the VIX, which is the volatility index, which gauges volatility in the market, is up almost 50%. If you had call options on the VIX, congratulations, because you're stoked. I wish I had some of those. Thankfully, I did have a lot of put options out today, so those kind of balanced out the call options I had. But again, the VIX is a volatility index that shows volatility in the market. And that, if I can sum one thing up, that isn't very telling to any of you who want future predictions, but there is going to be a lot of volatility in this market. I personally, I'm not a day trader. If you guys do watch me, you would know that I'm a swing trader. I bet on macro movements. So if I am betting on the macro, again, I think it's foolish to bet on the short term, but I am extremely confident that over the coming months, I'll say this, I think around election time, because every year, obviously not every year, every 4 years, every time there's an election, especially this year, when there's so much uncertainty and so much civil unrest and so much just kind of doubt of our current government, which isn't good, but that's the reality of where we're at in this world right now. I don't see how there can be confidence in the market, and there's so many freaking retail investors in this market right now, and so much new money, which again is always good. I say that it's great that people are educating themselves and getting exposed, but it's very dangerous for all the Robinhood investors and all the Davy day traders out there who got in down here because they bought low and have only experienced this rally and think they're freaking little gods because they came into the market when it was at one of its craziest times ever. So that's just another example that leads to such extreme volatility and weak hands. That's the best way to kind of describe that genre of people, of new investors, is just weak hands. After today, I bet so many people, so many kids ended up selling their positions because they went down significantly and they got scared and sold their positions. All right, as well as margin calls. And that reminds me, sorry guys, I just rambled there, but I do want to get into this. I just want to read a couple of these. I read through the whole thing. I only figured a couple were actually worth going through, but this is a great read, and it's definitely worth the time if you are truly and want to be involved in these markets. All right, so I want to start with this one, this first one actually, because I feel like this kind of sums up the entirety and like aligns with the way I'm thinking the best of all of these. Fed Chair Jerome Powell, okay, so the chairman of the Fed, the man who's been printing the trillions of dollars, very important individual, yesterday really reminded investors that there's a huge gap between the economic reality and the market reality. Just a reminder, combined with a lot of the second wave headlines, prompted an opportunity to take profits. A lot of weak hands bought the market at the very end of this rally anyway, so you're just seeing that tumble now. The headlines about a potential second wave of the coronavirus, obviously, are the main cause, but we're due anyway for a pullback. Stocks can't go up forever. All right, so again, I should have just summarized everything I just rambled on about in that said it way better. But again, like there's so much news about the second wave of COVID. A lot of people, the way I can describe this relief rally best is blind optimism. All right, so blind optimism has driven this rally. Again, states are beginning to open back up. A lot of people think, oh, last week the jobs report, it was up 2.5 million. Yeah, but there's still 14 million people out of jobs, and not all of those people are going to get jobs back. Some kid recently hit me up saying I'm an idiot, and those comments do get to me sometimes. I'll be real, but it just shows me that there are definitely some just uneducated people out there. They think because jobs went up 2.5 million or by 2.5 mil last week, which is great. That is a step in the right direction, but it doesn't mean that all the jobs are going to come back. There's no way. If you think that all the small to medium sized businesses are going to have the capital to be able to rehire everyone who they fired, there's no chance. So I think a lot of people are getting overly optimistic about the reopening that's going on. And then again, now you see all the news from Texas, Louisiana, Florida, some of those southern states that began reopening a couple weeks ago. Now you see the aftermath of reopening because they're having record high COVID cases and hospitalizations. So we're in a crazy place right now. Everything is trending, in my eyes, down. And again, I've been saying this. If you guys follow me, I'm sorry if I'm repeating myself, but I say so often, or like since this, like probably since back here, this whole rally right here, I thought to be completely honest, I thought we were gonna pull back right here, and this was gonna be the dead cat bounce that we were all expecting initially. But there's just been so much optimism, so much irrational optimism, that it has just fueled this crazy bull market, to where the economy and the market are completely separated. Because, again, like back here, we're almost, up until today, we're almost at all-time highs again. That's insane. In an economy, again, the unemployment still is worse than it was during the Great Depression back here. And we're almost back up to all-time highs. You see this, there was no chance that that got pretty high as well. Again, that's dead cat bounces. They occur. Keep an eye out for those. If you aren't familiar with those, definitely keep an eye out for those, because those happen in almost both ways actually. A lot of times, if you see a significant move up, it will be followed by a move down, and then up, and then down. Again, volatility. You guys watch the VIX. The VIX, the volatility index, is a very important gauge of understanding how to play these markets, because when there's volatility, there's just going to be, that's exactly what volatility is. It's rapid moves up and rapid moves down. Okay, so keep an eye out for that. We'll just go over a few of these. I want to start to wrap this up. I actually did cover a lot of the points I wanted to cover. I just rambled on. I'm passionate about this subject specifically, and I have been thinking about this video for a while. So sorry to you guys if you got bored, but we will still cover a few of these. Dow headed for worst day since April. Again, I think it was significantly worse than it was than any of those in April, at least on a weekly candle. So that's definitely what I forgot. We're heading for sure for the worst week since April, or since this whole thing, since this bounce that happened back in March. Okay, so where was it? Okay, so Treasury Secretary Mnuchin, we can't shut down the economy again. 100% agree. Treasury Secretary Mnuchin told Squawk on the Street Thursday that it would be too costly to shut down the American economy again to try to slow down the spread of COVID-19, despite reports of higher hospitalizations in recent days. And I quote, "We can't shut down the economy again. I think we've learned that if you shut down the economy, you're going to create more damage." Okay, so 100% agree with this. There is so much civil unrest right now. People are getting stir crazy in their houses. There's no chance, even if a second wave comes, which it looks like it is, that we can economically shut down the economy again. We've already printed trillions upon trillions of dollars and stimulated as much as we can, and the economy's still in shambles. And there's no chance, again, even if people were dying, like, there's definitely going to be people who die. It's super sad, but there's been so much heartache and so much just irreparable damage caused to almost everybody due to this lockdown. And this, again, they shut down the entire economy. So many people are jobless. I know so many people who are unemployed right now, and again, a lot of people aren't going to get their job back. So there is irreparable damage caused by this lockdown, and there's no way that they can do it again, even if this second wave is more significant than the first wave. Okay, so that's very important to keep in mind. Scroll down here. Okay, so airline and cruise operators drop. Investors shed riskier reopening plays on Thursday as concerns grew about a second wave of the deadly coronavirus. Okay, so all these travel stocks. This is a great example. All the travel stocks. So Hertz. You know how Hertz over doubled a few days ago. So it was up like 120%, 130% a few days ago. That is the perfect example of these new Robinhood investors. And I can't remember, I don't think I mentioned it, but tomorrow I'm actually going to make a video talking about how Robinhood investors right now run this market. Okay, so for the first time in forever, hedge funds are taking a backseat. Retail investors run this market right now. And that's why companies who just went bankrupt, like Hertz, have a bunch of kids investing in it, because they see the shiny object and they invest in it. Okay, so I really want to make that video. I'm looking forward to making that video because it's so important to understand not only the game, but who you're playing against within the game. All right, so I look forward to making that video, but it's so not surprising to me. It comes back to the weak hands again, right? Like these kids who only know up, who only know stocks only go up, and they see a down day, they have weak hands. They don't have the stomach to take that down day, and they sell, and that sell just triggers that, the dominoes start falling. Okay, so retailers drop as investors flee reopening names. Fewer than expected jobless claims. Again, jobless claims fall for the 10th week straight, but still high. So again, things are trending in the right direction slowly, but it doesn't warrant, from an economical perspective, it does not justify the movement in the stock markets. Okay, the stock markets are still way overvalued, way overpriced. Obviously, the majority, there are certain plays that are more valuable than they were, like the Corona economy plays, but the majority of the market is still overvalued, in my opinion. Okay, so we will call it there, guys. Sorry, again, I'm very passionate about this subject. I really want to get this message across to you guys, and just for you to be mindful if you are another trader. And I know it might have sounded like I was coming off a little harsh on anyone who's newer to the game in this video, but again, it's so awesome. It's so great in my mind that there's so many of those retail Joes, so many of those day traders entering the market and learning, because that's such a significant step in your future and in like your financial literacy for the rest of your life. Okay, the earlier you start, the better. But in a time of such volatility and such just crazy, the market's crazy, the economy's crazy, the world's crazy, the psyche of everyone involved is crazy. Like, the world is in such a crazy place. So this is a very sketchy time to learn, but it's also very important just to, even if you don't want to play this market, even if you just want to sit in the sidelines, it's very good to gauge how markets react to certain situations, certain global macroeconomic situations, and just learn from that and spectate and again, just take note of what's going on so you can apply the knowledge you've gained from that experience to future experiences. Okay, so we'll call it there, guys, for the last time. Again, sorry for preaching, but I'll stop there. Let me know what you guys think about this down in the comments. If you think my thoughts are crazy, or if you agree, or what you think, and if there's any factors that you think I missed out on and didn't include in this, or anything you want me to talk about in future videos. Okay, because times are about to get crazy. I do truly believe that over the course of the next few months we will see significant downward movement. One more thing, I think a big catalyst, even if the markets do bounce and go flat for a while, I do think that earnings come end of July, early August, like big tech earnings, quarter 2, quarter 3 earnings come out. That will definitely be the catalyst, because people think the reopening will be successful, and I don't think that it will be nearly as impressive as a lot of people think it might be. Okay, so keep an eye out for that. Again, we'll call it there, guys, for the last time. As always, I appreciate it if you give the video a like. Again, drop a comment, subscribe if you're new. Check out the complete portfolio newsletter down below. First link, it's exactly as it states. It is a complete breakdown of my portfolio if you guys are interested in how I'm playing this. Again, my shorts tomorrow are going to look pretty good. I have some short plays. I actually just shorted Lululemon a while ago because they announced earnings today, and they absolutely tanked after hours, so I'm very excited to see how those put options do in the morning. Yeah, again, I update my portfolio every trading day. I send out a newsletter. It's more real-time updates of what I'm thinking, the trades I'm making, and why I'm making the trades I'm making. Okay, so check that out if you're interested at all. Call it there, guys. As always, take action, make waves. Peace. All right, later, guys.